Hello, everyone, and welcome to another episode of the Thunderstock Show. I'm your host, Ross Stockdale, Fractional Chief Marketing Officer and owner of Thunderstock Marketing. The show is a collection of valuable brainstorms to enhance your life, liberty, and pursuit of property. As always, I have a very special guest, and you've been seeing a theme if you've been watching. Fractional CMO, Chris May, with over 15 years in finance, strategy, ops, some background in Wall Street, corporate finance, and boutique advisory firms. He's seen it all. Chris, I'm stoked to have you on the show. Tell us a little bit about
Ross, good to be
yourself,
here,
man.
man. Thanks for having me. I appreciate it. This will be fun, and I think we got a lot of good things to jam on.
Let's do it. So, Chris, what was step number one to getting where you're at? I'm always wary if I talk to somebody who's a 21-year-old fractional CMO. I just don't believe them. We've got some years under our belt. What was step one in this journey for you?
Man, I started my firm when I was 30 years old, right? And so, yeah, I had a number of years of professional experience before I took the plunge in varying levels of accounting and finance roles. And so, sort of learning the ins and outs of the trade before being able to offer it to customers was really important to me. But honestly, the thesis and the idea for Quadrant came out of my own experience of being a CFO at a smaller business and realizing that companies in that lower middle market sort of growth stage, let's call it, right, 5 to 25 million revenue type businesses, they need more than your traditional bookkeeping service. They need to professionalize their accounting and finance. They might have audits, they might have boards, they might have institutional investors, and they need things to be airtight. They need fidelity in their numbers. They need to take to the next level and understand their numbers and how that affects their businesses and the decisions that they make. What levers can they pull to grow and grow responsibly? And so, doing my own role as a CFO within a company, I learned a lot about that. But then I also noticed a lot of similar size companies to the one that I was at full time needing these types of tools, and their tax accountant was doing their bookkeeping. One of the partners or founders was doing the bookkeeping, and this is not in their domain. They do something completely different. And so they just weren't getting the right information and they weren't set up properly for success. And so that was the first thesis that I had. And I'll be honest, man, it was probably 2 years in the making before I finally started Quadrant. I had a lot of those self-doubts about leaving the comfort of my W-2 job and taking that plunge, if you will. And I'm so glad I did it. And I haven't looked back, here on year 8 of running Quadrant and growing it. And it's been a really fun ride. So I'll say, getting those skills up front so that you know that you're really good at what you're going to offer to the market. And then having the audacity almost to just do it and get out there and sell and offer what you think the market needs. And I gave myself a year. I said, I'm going to try this for a year, and if I don't get some customers and some traction, I can go back to doing what I was doing before. And I think I use this, like Jeff Bezos has this famous like two-way door, one and two-way door framework, where if it's a one-way door, meaning you can't come back through it, you need to be very, very careful about making that decision and take a lot of time on doing that. If it's a two-way door where you can walk through it and walk right back if it's not working, that should be quick and easy to go ahead and try it. And so I wish I'd have known that framework before, because I would have started the company earlier. Because when I
Mm.
was 20 something years old, I didn't have, family and kids and all that yet. I didn't have much to lose. I was just scared and doubtful. And once I did it was awesome, and it's been a fun ride.
Couple things I want to ask you about. That's really helpful intro. So, one of the things you said was that you wanted to do this for 2 years, but then you just took the plunge. I think the word you used was audacity is required, and it's so true because I remember coming out of college and my first ever marketing job wasn't even a job, it was a side hustle that I was doing for small business owners that were friends and family. And I was getting them great results, and I did it for free to build a resume. I didn't have any, in my apparent experience, I didn't have any corporate experience. I'd never sold anything before, B2B at all. doubt, just all doubt, right? And I was like, I don't, what audacity do I really have, even though I've got like 3 case studies. I took my first W-2 job, and I feel like every W-2 job I had, I always wanted to do my own thing, but I always wrestled with that doubt of timing or experience or competence or whatever you want to call it, but I have the confidence. So my question for you is, when did you know it was the right time? Like what triggered you to make the jump?
I finally got the confidence to just do it. I mean, I can't say that it was the stars aligned or some perfect moment. I just did it, you know, and you hit on a couple of key things there that every person that starts a company or has a thought of starting a company feels, and it's failure. You know, I mean, you're gonna fail. I can't tell you how many times I've failed. I underperformed on an engagement. I, you know, didn't get the client. I didn't know what I was doing and just had to figure it out. And like failure is part of it. And so trying to just not be afraid of failure, but embracing failure, I think is the key to that. So there wasn't one thing that I can point to and say, this is what got me over the edge to start it. It was me just doing it. And I will say too, once you have that, once you take that step, for me personally, like I had a fire in my belly. Like I was calling, reaching out to, going to lunch, drinks, coffees with anybody who would listen to me, like complete shameless plugging nonstop. And I mean, that's what it takes to get those first few clients and to get some traction.
And it's what it takes to get the reps. You can't,
Yeah.
I see by your hat and just from knowing you for how much I know you, you're into golf. I'm sure that your last round of golf was a heck of a lot better than your first round of golf. And you still,
Marginally.
yeah, marginally, but still probably improvement. But the amount of repetitions it takes for people that may not have played sports or maybe lifted weights, like I've been lifting weights for 20 years, not to date myself, but it's become a lot easier to not get injured, to know what I'm supposed to be doing, how to do it, recovery, and it's also taken thousands and thousands of reps. So, um, to touch on something you said after you had enough wins, right? The losses, you basically were able to stomach and have the right framework around the losses so that you look at them as necessary to get to the wins. I think
Yeah.
everyone should have
I
that
say you
similar.
either win or you learn. That's how I try
Right.
to think about it.
But then you've had enough wins that would give you the confidence. So losses give you knowledge, wins give you confidence. What are some of the early wins that stood out to you that you're like, man, this feeling is awesome?
Yeah, so I mean, there's a couple that I can think of off the top of my head, and I think what's interesting with this is when you're in this early stages of starting a company, is how resourceful can you be? And so I remember specifically taking on one of my first clients. It was a startup company. They were looking to go raise some capital, and I oversold myself on my ability as a CFO to help them navigate the capital markets and raise that round and you know represent their company and all of that more than you know my resume dictated. And so when I took that project on, it was, oh, wow, okay, I have to figure this out. I have to be resourceful. I have to learn, like build this plane as we're flying it, if you will.
Mm-hmm.
And I spent an inordinate amount of time self-educating, learning, being resourceful to get them through that successful fundraise. And it was such an enormous learning experience for me, but it's another example of like having that faith and taking it on when instead of being afraid of it. So that's one example, right? It was I wasn't quite ready for this assignment to go raise millions of dollars and help this company do that, but it worked out because I, you know, took that risk and went out and figured it out and put everything I had into it. That company is still a client of ours today. I mean, they've gotten to a place where they've moved from raising capital to being profitable and running a good business, but they're still with us. You know, over 7 years later, and so that's just like a testament of that like long-term commitment that when you figure something out with somebody in the trenches, like they're gonna be forever grateful and vice versa. And so that's one example where I went in and figured it out and made it happen for a client when it was I was a little bit out ahead of my skis, if you will. And I would say like the second is figuring out when you do need actual help. Like, when do I need to go bring somebody in? When do I need to hire that first person? When do I need to bring in a sub who has a specific skill set? Right. And so it's such a delicate line between what I was just describing of like figuring it out and being resourceful versus being, almost like reckless to the point where it all will fall apart. You know what I mean? And so there was a bigger company that was one of my earlier clients where I got into there. They weren't raising capital, but they were growing really fast and they needed a lot of help. And it was across the entire accounting and CFO spectrum. So it wasn't just the strategic CFO stuff. It was, we need to make our accounting operations scalable, audit ready, and a lot better than what they have been, which has just been your traditional bookkeeping. And at that point, I knew I had to bring on, somebody that was a much better accounting tactician than I was to come in and assist with that. And that was sort of the genesis of the first person that I brought on and hired. And they started out as a 1099 and then eventually became an employee. But that's the other lesson there. One of my earlier, wins or early reps was, figuring out what you can do. And even if that's a little bit above your means, like doing what you can, but then knowing when you're about to crash that plane that you were building and trying to bring in a co-pilot, to use that analogy again.
Yeah, I think that one recurring trend I've seen, I work with companies from startup that's funded, whether it's Series A or it's bootstrapped, all the way up to 50 million. In the agency days, my biggest client was 600 mil, but that's not my sweet spot as a fractional CMO. But one thing that I found in that range between 5 to, let's say, 25, 20, is that they may have help from their CPA. So their tax situation might be fine. Maybe those firms have pretty good bookkeeping. But rarely do I ever find that they have the whole gamut of bookkeeping, accounting, CFO. So what's one way that you approach that size company and you say, "Hey, look, before we sign any contracts or come to any plans, let's audit your needs," because honestly, Chris, oftentimes that size business might not know the difference between accounting and finance, especially if they've never taken, they never had to, right? Because they didn't have that pain.
Yeah, I mean, I think a lot of what we try to uncover when we're prospecting and talking to leads, um, has been honed in how that founder, CEO, whoever I'm talking to, how they talk about their own financials. And I can tell very quickly if it's rudimentary or if it's sophisticated, right? And that informs a lot to me of, okay, where are they in the life cycle of this journey as it relates to their accounting and finances? And so there's also a lot of indicators around just where a company is from a business model perspective, right? So is this company in the early stages? They might need very light CFO if they're really early stage, but they really got to get their house in order on the accounting side. Did they just take on some external funding and now they have somebody, a stakeholder to answer to that's not just the founder, right? Or a partner. That's going to require a lot more on the reporting side and data intelligence and thought partnership around, okay, we have $5 million of this external capital. How are we going to spend this to get the highest amount of ROI and growth out of it? And so when I'm underwriting a client, it's really just getting to know who that person is and figure out where they are in their own journey, what they know. And, you mentioned something about like bookkeeping and the tax firms being involved. I can't tell you how many times we've gotten into some engagements with clients and they were like very, very convinced that their tax accountant was doing their reconciliations and their bookkeeping and it was all kosher, but that's not the tax accountant's like main deal, right? They're a tax firm. And so keeping tabs on all the little things and the money in and out, how the general ledger is set up, what's the difference between what's on the profit and loss versus the balance sheet, what's capitalized and what's not, what's being shown as net income and versus what can we take off of that to reduce your taxable net income. Like all of those little things are only found when you're in the trenches day to day, week to week with these companies, and you fully understand their business model and their ins and outs. And so that's part of our value proposition at Quadrant. When we work with clients, like we're an extension of their team. It's not like a bookkeeping firm or a tax firm who just goes in and does bank reconciliations each month. You know what I mean? And so we're able to pick up on a lot of nuances or idiosyncrasies and be a change agent for these companies to like not just help them where they are now, but where do they want to be in 12 months, 24 months, 36 months. And so that's how I think about the difference too between CFO services and accounting services. I delineate it by time. So like the accounting side is the historical and the now. Is the data properly categorized? Is there fidelity in these numbers? Are they defensible to a banker, an investor, an auditor? And then the CFO takes that data and says, now what? What is the future? What are we going to do with this information? What decisions are we going to make to ensure this company continues to be profitable or grow or whatever their mandate is? And so you mentioned something, when you talk about the difference between the CFO and the accounting worlds, and I can't stand it when people build themselves as CFOs, but they're really accountants or bookkeepers. And so we try to do a really, really, really good job when we talk to people of delineating those two roles. And so like our CFOs on our team at Quadrant, they're not in QuickBooks doing, the general bookkeeping work. They're not. They are thinking high level. How can we help this founder, this partner, this owner use this data to make the best informed decisions to grow their company? And that's a really important thing that's happening. And unfortunately, there's a lot of conflation in my world.
Well said. I think the quote that stood out the most to me was when you said bookkeeping and accounting function looks at the past up until now, and then finance is, F&F, future finance, is we're here now. Where do we want to be in the future? And I think that oftentimes for business owners, they're stuck in the here and now, the present day.
Mm-hmm.
They get on this roller coaster of emotions between yesterday we had a loss, this day we had a win, and you're going up and down. But if
Yeah.
you don't have accounting and finance, you can't see the big picture on both ends of the future and past to get you that emotional stability, not even emotional, logical stability, really. Um, so what's one way, Chris, that you approach the long-term relationship with a client that you found, you've had clients that have been with you since darn near the beginning. What are some key factors that you look for in a long-term strategic partner when you're looking to bring on a client?
Yeah, I think somebody who is a highly functioning communicator, I think is so key to a successful partnership with us. And obviously that the onus is on us to communicate very effectively and well, also in that scenario. But we've had some less than stellar engagements, let's call it, where the client really wanted things to just be on autopilot. They just wanted these sets of reports and analysis in their inbox by this date each month. They didn't want to engage as much. And so that doesn't work as well. We don't find that we're able to add the value, that the partnership doesn't flourish as much if the client side isn't inquisitive, isn't engaged, isn't part of that thought partnership on a high level. And so when that happens, we're able to really add value to our clients because, like you said, they know better than anybody the ins and outs and what's going on, what they're dealing with day to day. And it's the CFO's job to extrapolate that information and help them sort of see around the corner and see things that they might not be able to see when they're in the weeds day to day. So I think communication and a willingness to be inquisitive and engage is like the number one factor. And here's another little sort of tidbit of a litmus test when you can find out the difference between a CFO and an accountant or bookkeeper. Those accounting and bookkeeper people who are billing themselves as CFO, they don't ask those big, tough, strategic, long-term questions, right? They're just not framed to think that way. And so on our CFO engagements, we'll often start with like a longer term plan, right? 12 months, 24 months, 36 months, whatever we think is necessary. And then we'll reverse engineer from that what needs to happen between now and then to help reach that goal. And of course, that's iterated and changed on a regular basis, but that at least sets a foundation for what we can be thinking about and what we can be helping with along the way.
So starting with the end in mind.
Yeah, for sure. Or at least a future date, maybe not the end.
Yeah, exactly. Exactly. With a goal in mind. So I want to go back to a couple of things that we discussed that I want to dig a little bit deeper into. First of all, we know we've discussed the difference theoretically between accounting and finance, but I understand you acquired an accounting firm and that's a separate business, separate entity than your CFO firm. Can you talk me through a little bit behind that strategic decision and how you brand, position, and serve clients with both underneath your umbrella?
Yeah, for sure. So about 3 years ago, we acquired a company called Less Accounting, right? Completely separate from Quadrant Advisory, which is our fractional CFO business. And the reason behind that was, we did have a lot of opportunities and potential clients coming in who they weren't ready for all of the bells and whistles and the complexity and the sophistication that our ideal client customer segment was focused on at Quadrant. And so we made the decision to buy this bookkeeping practice. And all it does is cloud bookkeeping, right? Virtual remote bookkeeping. And it's very simple, straightforward. The entire ethos, less accounting is keep it straightforward. We're going to do your financials on a regular basis. You're going to have a dedicated bookkeeper. It's going to be very cost effective. And the thought process on the symbiosis between the two is that clients will come in when at the sort of entry level at Less Accounting, and as they grow, their needs will grow, they'll become more sophisticated as a company, then we can move them over to Quadrant where they're going to get that higher level strategic support, different type of sort of white glove professionalized accounting that they're going to need. But really, we wanted to have an entry point to where we can touch companies in an earlier stage than we were able to at Quadrant. And so that was the strategic thought there. And it's been a really fun ride. It's been an interesting journey. That was the first business I had ever acquired. And so there's a lot of lessons that I've learned along the way through that. But generally speaking, it was to expand our customer segment and go a little bit downstream than what we traditionally do at Quadrant. And we didn't want to roll it into Quadrant and make it part of the Quadrant brand because we didn't want to dilute that brand. Because we have some smaller clients at Quadrant, and then we have some bigger clients at Less who sort of toe the line. And you look at the Quadrant clients would be like, well, why am I not in Less and saving X amount a month, or the Less Accounting clients, vice versa. And so, we want to separate those so that we don't dilute or muddy the waters. And we can't be everything to everybody under the same umbrella. And so the focus, the customer segment, the pricing and the costs that we offer, they're completely different, and they need to be for that exact reason, because otherwise our services, our our statement of work and engagements, it would be too much, and it would seem too broad, being everything to everybody.
Right. Hmm. Just as much as you need to separate debits and credits, you need to separate corporate entities, not have everything all, it can't be all in the same column or else you don't get the result.
Yeah, and the business model is just completely different, and so they're not as compatible. It's just not going to be as compatible. Um, when you think through how you're acquiring customers and how you're servicing those customers.
Right. Something for me to think about now that you're describing that is I have Thunderstock Marketing. Before that, I was a managing partner and co-founder of a private equity firm, and I learned more in my first business acquisition going through it personally than any other experience in my career. Whether that was the psychology of exiting of founders, whether that was what does it take for a business to be exit ready, go to market, whatever that looks like, deals and deal structures, terms, pricing, amplifiers, and levers. that was all great, but I think one of the things that I learned the most was just how important it is to have a plan for success, right? I've seen businesses that have been successful and also not successful, and some have had plans and some haven't. It seems like there's a high correlation between businesses that I found to be the most successful and desirable that not only had a plan, but they executed against that plan. So, what are some of the ways that you hold clients accountable being their long-term partner? Because I think consultants are different too, even more than fractionals. Because I find consultants make lists of suggestions and audits, and they're kind of like hands off with, "Hey, this is my suggestion, take it or leave it." So, what are some methods and strategies you use to keep clients on track once the plan's set?
Yeah, that's a really interesting topic because you need a plan and you want to follow a plan. But when you're a small business, right, lower middle market, that range that we've been discussing, plans change. You have to iterate. You have to be fluid. You have to be able to, you know, update what you're trying to do and how you're trying to do it. And so there is some of that push and pull when it comes to being a fractional CFO of helping design and implement the plan, but also raising the red flag when what your plan was needs to be changed, needs to be reevaluated, needs to be looked at. And that's not to say that you have to completely go back and reinvent the wheel, but if you have a plan in place, and for instance, on the finance side, there are a couple of different key performance indicators that you could look at from a business perspective that you're helping track and keep in line. And revenue growth, margin discipline, those are just a couple of them. And so some firms, some clients, they don't really care about margin as much, right? They're like myopically focused on revenue and how high their revenue can go and how fast it can go. But we've worked with companies who have gone from 5 million in revenue to 10 million in revenue, and their bottom line basically stayed the same. And when you're a CFO, that's not a win, right? You're doing more work for more people with more headache and less money in your pocket on the profit side. And so margin discipline is a huge thing that we talk about with our clients. The exception to that, right, is on the high growth venture backed companies. A lot of them really don't even care about profit, and that's on purpose. They
Sure.
only want to hit a very certain level of, velocity on customer acquisition and growth so they can hit a certain valuation threshold and retrade it or sell it or
Yeah, not
something
not
like that.
everybody is Snapchat and Uber.
That's true. Yeah. And again, that goes back to the communication with your client, right? And understanding their business model. When we work with our clients too, not only are we talking to the CEO, whoever our main day-to-day management point of contact is, like, our CFOs are in the room during the board meetings, during, those discussions with external stakeholders. And so they're hearing the varying interests that are there and helping to sort of be that mediator at the table to go back with the CEO one-on-one after that and say, here's what I heard, here's what we need to think about strategically to change the plan and to make sure that we're doing what we do to grow this business, but that the board's not going to fire you as CEO in 3 quarters because of A, B, and C.
Well, you made such an interesting point there that I'm going to tie back to a very quick story. One of the things we talked about earlier in the show was when did you have the confidence or know that you were capable or ready to take that next step into doing this business? I'll tell you one of the moments that stood out for me
Mm-hmm.
is I've worked both in-house as a marketer in charge of staff. I've worked in marketing agencies in leadership. And as a W-2 employee, you're always like, yeah, I'm in charge of this division or this team, but I'm not the person pulling the levers for P&L. And then when I started at the PE firm, it was like, yeah, we've done some acquisitions and I've helped some of the target asset to grow. But it wasn't until I would say one of my first annual planning meetings where I had to come prepared with data and a deck and basically come up with a thesis and to be able to defend a
Yeah.
thesis for growth. And there was several Wharton MBAs and people with all kinds of letters after the name that were finance. And they asked a few questions, tried to poke holes in it. I had answers ready. Like, sounds pretty good. And then we executed the plan and it worked out within a pretty sure confidence interval that I was like, I could do this. So Anyway, I thought I'd share that story because I think that's maybe the key for the finance and accounting world. It's like if someone asks you, "Hey, I think I want to be a CFO," it's like, "Have you ever defended a thesis in front of a board? If no, maybe try doing that first." I don't know.
Yeah, I mean that's such a good point because it's oftentimes too those people. Let's just keep using board as an example. They're there to play devil's advocate, right? What they're saying and what they're asking and what they're drilling down on may not be a hill they're going to die on. It may not be a mandate that they're saying you have to do this. They're scenario planning in real time, right? They're thinking through the what's the least amount of downside risk with the highest amount of asymmetrical upside potential, and what are the paths to take there? And oftentimes, if you don't have the answers or the tools to confidently answer them, even if it's not a fully direct answer, it's a it's a thoughtful way to address those concerns, then they're just going to continue to pound on that until they get what they're looking for. But and so I will say that too, like the first time founders who have boards and external stakeholders, um, preparing them for those, and then as a CFO, fractional CFO, being in their corner, but then also giving the other side of the table something that they're looking for that's coherent and makes sense and thoughtful is
What's
a
the number
huge
one rule of
balance.
law, Chris? Don't represent yourself. Get a lawyer. It's a different
Yeah,
room, but logic
yeah, for
applies.
sure. Yeah, and some of our clients, I'll just use like a tech startup, for example. Like they're a technical founder is really, really good at doing what they do technically. But they don't know what they don't know. And that's often what a CFO helps bring to the table is things that they don't know about finance and accounting and the decisions that they make and how it affects various parts of their business and their strategy. So yeah, I mean, it sort of ties back to like how you what you asked about with clients when you're trying to figure out, how you can add value and what the issues are up front. I mean, when we're pitching clients, I'm bringing my CFOs on those calls. It's not like I'm selling this to somebody and then bringing in a CFO. This CFO needs to have some thoughts around how they can execute and add value quickly before an engagement's even signed.
I love that. You're not playing that shell game of musical chairs where there's one person who sells it, another person that's was unrelated to the process delivers it. You're bringing in all the internal stakeholders in your team too to be prepared post contract sign, which is a super helpful frame of which everyone would consider.
Yeah.
Chris, I'm going to go at a 30,000 foot view and
Okay.
putting you at not just in your business but in your life in the seat of the here and now. Put your finance hat on and talk to your end of the day, Chris. Maybe you're 80 years old, you're still with it, but you're pretty close to retirement. Maybe you're just spending your days golfing. And then your 8-year-old self, we're gonna audit the financials of life and look back and say, here's what I learned from the past, what I want to tell you, and here's what I'm future casting and want to talk to you about. How does that conversation look? Being somewhere in the middle.
Yeah, I mean, if we start on the tail end, right, the 80-year-old self, somebody who is like myself, type A, go, go, go personality, I would tell myself to slow down, right? To
Mm,
stop and smell the roses sometimes, because an analytical brain that's always thinking, that's always trying to accomplish something and be driven and ambitious can get caught up in that. I've got 3 kids now, a family, and a lot of that is really important. And so you have a finite amount of time, and spending every waking minute thinking about business and finance and numbers and customers is unhealthy, right? And so for me, over the last several years of becoming a dad and growing a business and being an entrepreneur, like finding that balance and slowing down, taking stock in what I have and what I should be grateful for in life has been an exercise that I continue to sharpen and get better at. And so I think about that when I'm, later in life. I know I would have wished that I would have slowed down, written more things down, documented things not only about my life and work, but about family, that I can sort of think through and learn and pass on, if you will. And so that's my number one thing when I think about growing older is like business and finance is fun. It's cool. It's important to be successful and to think about those things and have ambition, but it's not the end of the day. Very few people are on their deathbed saying, I wish I signed another client or, grown my company another X million dollars. And so that's what I think about on that end of the spectrum. And then thinking back to 8 years old, right? It's like the other end of the equation where, throughout my teenage years and college and 20s, I probably wasn't as focused as I needed to be. And, I was, out there being a young man, if you will, and just having fun. And sometimes I wish that I would have been a little bit more disciplined and thought about the future a little bit more. Not watched as much TV or went out and drinking with my friends as much or whatever, but thinking about how can I sharpen my skills? How can I become a better communicator, become a better person, become a better technician in my craft? But again, there's a delicate balance there because you have to live life. You have to like get out there and explore and meet people and do things. And so I try to like take everything with like the middle ground, right? You can't go too far anyway. And recently I've gotten really into like reading the Stoics and like Marcus Aurelius and things around that and using that as a guide to help how I think about life and how I use my time. And so, yeah, I mean, that's how I would think about it from the 8-year-old self is be a little bit more productive with your time, but have fun at the same time, right? You can't just be a monk or just be sitting there in the library the whole time you're in college. Otherwise, what you run into there is people who are in my world who don't have the EQ and the soft skills. They're excellent, insane finance and accounting professionals, but they can't talk their way out of a paper bag.
So maybe when you're 8-year-old self, you give them a Christmas gift of Ryan Holiday's book.
There you
Pick
go.
pick one. Very cool. I actually gave my daughter one of the Ryan Holiday books that he wrote for kids. So let's see if that sticks. I hope it does.
Great.
Cool. Well, everyone, this is the end of our show, but it's not the end of you guys. If you want to connect with Chris, Chris, where can people get a hold of you if they want to connect?
Yeah, I mean, we're on all the channels. I'm on all the social channels. Our website is www.wearequadrant.com. My LinkedIn is Chris-May-CFO. And find us online anywhere, follow our content, reach out, book a call. I'd love to chat and see if I can add value to any of your listeners.
Sounds great. Everyone listening, that concludes another episode of the Thunderstock Show. I hope that you had a valuable time. If you did, my only ask is that you share it with a friend. Until next time, everyone be well.